Hello, grads of FinLearn Academy and fellow traders. So let's do our weekly recap on the markets. And Nifty or broad markets are stuck in a trading band. And if you see, markets are neither trading around this high, but the swing low was tested multiple times. And what is the significance of this swing low? The significance is all the swing lows which had happened within the consolidation are at or around the 200-day moving average. So, on any dips or declines, the 200-day moving average is acting as a support level for the market. So, I'll plot the 200-day moving average. So, Nifty on three occasions have taken support at or around the 200-day moving average. So, now let's see whether it will break the highs or break the 200-day moving average. See, one thing I would like to highlight is that post the average, market has made a double bottom here, and we can see a retest of the 200-day moving average once again. For Nifty, with support at 200-day and the current price pattern, if I take the entire this consolidation, put it in form of a channel, so still the move is channelized. So which means that the trading band on Nifty is still intact. Any rise, rally, or uptrend will only be confirmed once we break around the upper end of the channel, which is around 17,400. And this can be called as a confirmed channel. Why? Because we have two tests of this highs. So as a trader, we are very clear that the next up move, if it starts, it will be only above 17,400, or we can see a week or so with volatility in the markets between 17,400 to 16,800 trading band. So the two things traders should keep in mind is the upper end of the channel and the 200-day. Multiple times 200-day has acted as a support. See, any support level which is very prominent, and if it is tested more than twice, the third time probably if Nifty is touching here, we could see some declines also there. So the fulcrum point in the markets to hold a positive view or buy on dips or declines should be with a stop of around 200-day moving average. Once you see a break of 200 average, possibly we are going to head much lower. But that's the alternate possibility. Right now, we are just trading within this band, the 200-day moving average and the upper end of the channel around 17,400. And going forward, volatility will be there. Uh, Fine. There are geopolitical concerns and various other things which are playing on the markets. And going from today here on till the next possibly March, you have lots of events which are lined up in the market which are going to add to the volatility. So as a trader, the 200 day is my cutoff point for long, and I'm buying on dips with stop below this. If 200 days breached, prepare yourself for a deeper decline or deeper cuts in the markets. And when can we say this sideways move get resolved in favor of bulls or buyers? Once we see a closing above 17,400. So Nifty, as it stuck for the last 1.5 months, that in a sideways trading band, it is likely to continue with choppiness being there, overnight volatility being there. So it's a rough ride out there in which the trades in such a range bound sideways market can't be any positional trade. So either we are swing traders at the current level or a day trader. For a positional trading, we need some strong evidence that is likely to cross this high. Currently, we don't have any such evidence out. So you are trading just a 500 points in the Nifty. Within this 500 points, you have a good amount of overnight volatility. So now let's move on to Bank Nifty. The same way, Nifty has taken support at 200 day, Bank Nifty has also taken support at 200 moving average. So till Bank Nifty is holding the 200-day average, the bias is positive. When it breaks, you will see weakness in Bank Nifty, which will add to the weakness in Nifty also. So keep a watch on the 200-day moving average on Bank Nifty, which is around 36,500. Now I'll plot the medium term average, which is my 50-day moving average. And let's see where the 50-day lies. I'll assign white color to the 50-day moving average. So Friday's low was the 50-day average from where market opened, touched that and bounced back. Fine. So you have multiple support levels between 50 and 200. And till 200 is not breached, it's a buy on dips with a stop. Once you see market takes out the 200-day, we will see deeper cuts in Bank Nifty also. And like Nifty, now I'll just keep the 200-day intact. And can we draw a channel also on the Bank Nifty? Yes, we can. If you see, both Bank Nifty and Nifty are channelized, which says that with declines there is a volatility, but still we are stuck in a trading band. So both on Nifty and Bank Nifty, for weakness, we need to see break of 200-day average, both on Nifty and Bank Nifty. Whereas to see the strength, we need to see Nifty breaking the channel on the upside above 17,400 and Bank Nifty breaking this channel approximately around 38,600 levels. Then only we can say the sideways consolidation phase is over and we are likely to see a trending move on the upside. Till we don't see that, expect choppiness even in Bank Nifty in the range of 36,500 to 38,500, which is approximately a 2,000 points trading band. So as long as the channel is intact, both Nifty and Bank Nifty trade the channel both on the long side as well as the short side. We are into a sideways trading market with high intraday as well as overnight volatility. So and before ending the sessions, I'll likely to repeat the two things you keep in watch from here on, not for the next week, but which side markets are breaking. Both the indices, Nifty and Bank Nifty, if it breaks the 200-day, we should see some strong selling out there. If it breaks the upper end of the channel, we should see an upside.